Good morning, ladies and gentlemen. It is Butch Shorak from Options University. It's Monday, February 11th, 2013, and welcome to Market Forecast, looking at the week that is to come, looking at a little at the week that has taken place. Access to this video is for educational and informational purposes only. Nothing contained in this video, website, or promotional material constitutes a promotion, recommendation, solicitation, or offer of any particular investment, security, or transaction. Options University provides educational services that are meant to teach you the risks and rewards of trading stocks and options, and we're not a service that tells you what to trade. We're not implying or guaranteeing any profit, and as always, do not trade with money that you cannot afford to lose. Looking at the week that took place, we see that it was rather flat for the week. As we look at the Dow, the NASDAQ, the S&P, and the Russell 2000, we see the NASDAQ slightly down, but basically flat for the week. We look at the that was the Dow. We look at the NASDAQ, we see up less than 1% at 0.5%, leading the market up for the week as Applenomics has done not much to help the NASDAQ during the first month and a half of the new year. We see S&P up 0.3%, Russell up 0.3%, most of these gains taking place on Friday as we had a bit of a breakout. At a year-to-date, and looking at levels that we cannot keep doing all year long as we're in about the first 5 weeks, we see that year-to-date the Dow is up 6.8%, NASDAQ up 5.8%, the actual lagger of all the indices. S&P up 6.4%, and of course Russell leading as it often does in the month of January and February, up 7.6% for the year. Realize that if it did this month after month, Russell would have to be up 84% for the year, so we know it cannot keep up this kind of pace. Looking at the week that's to come, we see that we do have a few announcements during the week. If we look at Monday, we see that on Monday we have little or nothing. We're looking at Tuesday, we see very little in economic announcements coming in on Tuesday. What's going to move the market this week? Is it going to be economic announcement? Doesn't look like it. Retail sales on Wednesday, import and export prices, business inventories, all on Wednesday. And then we come to our jobless claims on Thursday morning, which we have every single week, telling us what those employment numbers are doing. Nothing else worth looking at in the day of Thursday. And then Friday on February 15th, by the way, don't forget your Valentine on February 14th. If you do, you forget her, you will pay, or forget him. Empire State Manufacturing Survey up Friday morning before the market opens, industrial production before the market opens, and consumer sentiment, which could be a big one for the week as we round out the week and see where this week's going to go. Exactly what kind of a trend are we looking? What is the overall market doing? And looking at the S&P, we see that as the week went on, we went sideways on the short term, very short cycle until Friday. And we see that we are still in our uptrend. Notice the 50 above the 200, which is has the 30 above the 50. So we see that the uptrend is continuing. We are in an uptrend market, and we did break out on Friday to higher highs. Well, where are we headed? Well, we've got a target that we're looking at. Looking at the last week, looking at the last 5 days, we see that we went sideways. Anytime we pulled back to that flat line there, we started moving back up, and then Friday we had a bit of a breakout on the S&P. And again, the 200-day moving average sitting there, the 50-day moving average sitting there. It's been a long time since we've seen the 30-day moving average. As a matter of fact, the last time we saw the 30-day moving average was back in the beginning of January, just as the fiscal cliff was announced. We've had a long run here, and this run should start to get tired soon, as we saw the last time we had this kind of a cycle from November until the end of just short of Christmas. And you notice this run started with the fiscal cliff announcement, and we see that it has had a bit of a longer run, and this should be getting tired. We are a bit overbought, but this market just seems to ignore those movements. But cyclically, we are on the overbought side. We should have a pullback, but the trend is your friend until it ends, and so far it's not ending. As a matter of fact, Friday we moved on to new highs. Air should be getting a little thin up here, but markets do this where they'll run and run and run and run. Looking at the Dow, let's take a look at that. See for the week that we had a bit of a breakout on it on Friday, and we see that it went sideways following the other two indices. Looking at the NASDAQ, let's take a look at, let's look at the Dow. What was that last one? Was that the SPX? And I said Dow, I believe. Yes, that was the SPX on that short term. Let's take a look at the Dow. Looking at the Dow, we see that it went sideways for the week, lost some gas. Notice it was down a little bit for the week if we look at those 5 days, but not enough to talk about. Actually trending sideways didn't have nor participate in the breakout on Friday. First weakness that we've seen is the Dow has been a steady uptrender for quite some time. Looking at the NASDAQ, let's take a look at the NASDAQ. See, we had a breakout on the NASDAQ also, as we see that it, since the fiscal cliff, has not had the same moves that everything else has. That's because Apple has this huge influence on that average, but it's still, the rest of the market is looking pretty decent in the NASDAQ. And the leader of them all, the Russell 2000, our small cap, just keeps chugging along. 30 above the 50, above the 200, and it just keeps right on moving. All right, what does the VIX do in this kind of market? Well, we expect the VIX to go down. Did it? Yeah, there we are. We're sitting with the VIX, and it's down at that 13 number, showing very little fear in the market. No big concerns about where we are or what's happening. It just keeps clicking along. Very little fear, and therefore that does affect our volatility, and therefore it does affect our premium in our options. So good time to take advantage of some of those long verticals rather than the short verticals if you have the inclination and the knowledge to do so. Looking at the bond market, we see that it is going down and pulling back as the market pulled up during the past week. Expectations, and it followed them. Next, looking at the financials, they just keep right on clicking up. This is where our strength is. QE3 is fine, was fine for the financials, and they keep clicking along. Nowhere near levels they've been at in the past, but just kind of keep clicking up, and that is good for our economy and shows some health in the overall markets. Looking at oil, we see that during the last week, it basically pulled back during the last week and then went sideways. So oil sitting there, although I couldn't tell it at the pump because it seemed like every day I went out there the gas was a little higher during the last week. Finally, where is that safe haven? It's in gold, and it's continuing sideways as we see it no longer having those big moves to the upside. Will it? Yeah, when you get fear in the market, you can expect gold will go up. So looking for a breakout above 164, the next target is up there near previous highs for the last few months. How kind of volume did we have during this last week? Well, let's see. Here they are, the 5 days, and here we are. A couple days where we had big volume. This was on a down day, and we had another down day, but it did, notice that hammer that we got on Thursday, and then Friday, breakout on the smallest volume of the entire week. Not impressive as far as confirming that, but this thing keeps crawling to the upside until it stops. Take advantage of that. If you're a bull, you're loving this. It'll just keep clicking until it stops, and when it does, know what you're going to do, have a trading plan, and execute that trading plan to preserve the wins that we've had ever since the fiscal cliff announcement. For those of you that are gold members, stick around. We'll look at our stocks to watch. For those of you that are not gold members, we'd love to have you aboard. You can contact Options University. And if you'd like to see more free videos from Options University, go to www.optionsuniversity.com/free gold. So with that, it is Monday, February 11th, a new week in the market, a new week to make money. Go out and do some. This is Butch Shorak, Options University. Thank you for being here.